good morning and welcome to this edition of the newspaper show right here on ET Now. I'm Cheryl D'Souza along with Varun Hiramath. And last evening you had Prime Minister Narendra Modi come out and give that big announcement. Economic Times here, the front page, and that's what it's saying. Modi vaccine, 20 lakh crore rupees plus big reforms. That is the headline on the Economic Times. And let me move on and show you on the Times of India. The headline is saying PM raises stimulus size to 10% of the GDP, will total 20 lakh crore rupees and goes vocal for local. So that's the top headline on Economic Times as well as of Times of India. But let me take you through what are the other headlines that's there on the newspaper this morning. You have COVID opportunity set stage for mega reforms, like I just mentioned. Prime Minister Narendra Modi even talking about mega reforms. Lockdown 4.0 rules likely by May 18. That's the word coming in from the Prime Minister when he announced, he had that announcement yesterday. Moving on, March factory output contracts by a record 16.7%. And Jubilant and Gilead Inc. pact for Remdesivir. Along with that, you have Cipla and Hetero Labs and Mylan also who've inked that particular pact. What are the rest of the top stories this morning, Varun?
Right, Cheryl, good morning. So the first one from me today is that Vedanta might be going private. Anil Agarwal's come forward and made an offer saying that he's willing to take the company private. So we'll definitely be looking forward to hear what he's offering. I think the price band is somewhere in the tune of 89 rupees per share, but don't quote me, I'm not sure on that. The next one is consumer finance companies are to tighten their norms. So you're seeing what's happening, Bajaj Finance, and that's the leader. So clearly now they're getting all very cautious with their lending as the NPA risk is shooting up. And moving forward, airlines may soon get nod for limited operations. That's something we're tracking as well. Certain people who are open to travel or need to travel, the airlines might be opened up on a small scale for them. Then coming to the railways, but keeping it with transport, resumes operations with 8 trains. So there were some missions that we heard about yesterday where certain people were being moved from location to location. So the trains seem to be up and running to a certain extent. And finally, Swiggy is in talks for liquor delivery. So we know that they were exploring home delivery options for liquor as the surge at stores was very high. Seems Swiggy could be one partner that will help you fulfill delivery.
All right, those are the top stories that's there on the Economic Times. But let me move to ET Markets page and let me get you the top story that's there on the ET Markets page. And the first up is that the SGX Nifty has surged post PM's announcement, and it is hinting at a strong opening for our Indian markets. Apart from that, you have Nifty futures open interest fall to a decade low. Reliance Industries has raised over 10,000 crore rupees via bonds, and IBA proposes bad bank with 2 tiers. And lastly, insurers see up to 40% fall in non-COVID medical claims. And those are the top headlines on the Economic Times markets for you.
Right, let's also get you up to speed with the corporate stories. The first one's a repeat of what I just said earlier, consumer finance companies tightening their norms. So nothing really additional to add over there. Next is the DOT to defer sale or 5G sale and auction of 4G in 20. So that's again self-explanatory. Moving forward, Vodafone ideas to get 285 crores from its parent company. So quite a small amount, but nonetheless, at least the parent company is supplying some money, whereas earlier they had cut off all commitments. Moving forward, 20% of India's retail to shut shop. So now that the surveys are showing up and you're actually getting real data from the real economy, you're seeing that 20% of your small-time retailers might actually be looking at a shutdown. And finally, hotels get draft guidelines. So even if hotels will be operating or serving as containment centers or lending a hand to government entities and letting them stay in the hotel, there'll be strict drafted guidelines for these or SOPs for these, and hotels will have to follow those very closely. Okay, so, last night we all heard about the big economic push. Our Prime Minister came out and said a 20 lakh package, you can see that all over the front paper this morning, is in the offing. Now, if you look at what the RBI has already infused, they had done around 3.2% of GDP. In addition to that, you had TLTRO 2.0, you had the LCR reduction. So that takes their total infusion pretty high. In addition to that, the government had supplied 1.7 lakh crore in the Garib Kalyan Yojana. So if you add all of this up, it totally comes to around 10 lakh crore, or just under 5% of India's current GDP. So all the balanced stimulus measures that the PM is talking about should amount to around 10 lakh crore. The paper today saying that figure might be slightly higher. We know things like TLTRO 2.0 only saw half the demand. So there is a little, speculation on the exact figure, but broadly we're looking at another 10 lakh crores of stimulus expected to come in, Cheryl. Quite a large figure.
Varun, and just to take that point forward about the PM and the announcement that was made, he also hinted at the fact that the details of the package will be announced by the finance minister starting today. That's another takeaway that we got from his announcement. The Prime Minister, as we all know, has unmasked mother of all incentives to light of India. That is what Economic Times is reporting. Let me take you through what the entire reforms or what the entire stimulus package is going to consist of. Finance Minister starting today will be making announcement of that. That is what the Prime Minister actually announced as well. Prime Minister Narendra Modi announced a 20 lakh crore economic package, which includes measures already rolled out by the RBI and the government. Importantly, he also promised big-ticket structural reforms spanning a wide swathe of the economy. The details of the package will be announced by Finance Minister Nirmala Sitharaman. If you decipher the entire package, like even Varun mentioned earlier, the total stimulus is worth 20 lakh crore, which amounts up to around 10% of the GDP. What is already announced by the Finance Minister is 1.7 lakh crore rupees of cash and free food, and by RBI is 5.24 lakh crore rupees, largely a liquidity support. So what is left in balance is about 13.1 lakh crore rupees, which is about 6.5% of the GDP, and that you are likely to see coming in from the Finance Minister starting today, like the Prime Minister also mentioned.
All right, Cheryl, thanks for that. And coming back to the story on consumer finance, zero down payment. Consumer finance companies are tightening terms, fearing rising credit risks because of job losses and salary cuts due to the economy stalling in the wake of the coronavirus outbreak. So they're looking to play it a little safer. We all know the consumer finance companies are very aggressive. They always come up with very lucrative EMIs. We've all heard of the zero down payment, zero cost EMI, which you get with certain banking franchises. So, now that even good quality borrowers, people who were previously fine, able to make their payments, employment's at 25%, salaries are being slashed even at the top companies. So you really don't know what the outlook on these EMIs is, which is also why companies like Bajaj Finance are where they are. So what we're basically, or why the paper is really trying to flag off this morning, is that we might see a real change in trend in the way these companies are approaching their consumers, and they might be a lot more prudent before they give out such EMIs.
Moving on then, you have other story that's there on the Economic Times markets page, and that is about Vedanta. Anil Agarwal offers to take Vedanta private, and that's a big story that came in last evening. Vedanta Resources will offer 87.5 rupees per share, exercise to entail investment of about $2.5 billion. That's the word coming in from Chairman. But to talk more on this, what impact will it have and why this sort of a move, we have Mubina joining us. Mubina, take it away.
After paying $1 billion in 2018 to take Vedanta Resources private, Anil Agarwal now wants to do the same with Vedanta Limited listed on BSE and NSE and he's willing to offer 87.5 rupees. That's the indicative offer price per share to buy out the shares that's owned by the public, which is, by the way, at 48.94% and 49.86% if you consider that all American depository receipts are converted. So Vedanta Resources in total will have to cough up roughly about 16,200 crore rupees if you consider the price of 87.5 rupees, which, by the way, is extremely undervalued, especially if you look at the kind of assets that Vedanta has. A very cash-rich Hind Zinc with all of its assets. You're talking about Balco as well, several other global assets. The book value, I suppose, could be at about 170 to 180 rupees. But because of market forces, because of the COVID pandemic and the share market plunge, Vedanta is now just trading at about 89.5 rupees. So clearly, Anil Agarwal seems to be cashing in on the opportunity by trying to now, at this juncture, take the company private. But the question is, will Vedanta Resources as well have the resources to make that happen? Because remember, this company as well does have a $1.9 billion maturity coming up in September 2021. Then they have Vulcan's own privatization debt at about $625 million. $500 million of interest expenses, and Vedanta Resources' own cash holding is said to be less than $50 million. Moody's was extremely precarious about Vedanta Resources' cash position. But again, like I said, the fact is that with this delisting, Anil Agarwal's getting firstly a great valuation because Vedanta is at just about half of the 52-week high. It also gets full access to Hind Zinc's dividend. Hind Zinc, remember, is an extremely cash-rich company. The market cap is almost 30,000 crore rupees. And of course, that simpler structure for Vedanta Resources.
All right, there you have Vedanta, looking quite interesting. The last time Anil Agarwal bought this company, we all know what happened. The fact that he's trying to delist it now is honestly quite exciting. But switching gears to another story that's on page 8 of the paper. The IBA proposes a bad bank with 2 tiers. Basically, there's around 10 lakh crores of NPA or bad loans floating around in our financial system, and the government needs to figure out where to place these loans. Hence, it warrants for the creation of what they're now calling the bad bank. This will offer resolution in 3 stages. It'll be an AIF, an AMC, and an ARC. The ARC will be government-owned, the AMC will be a public-private partnership, and the AIF will be to acquire security receipts. The initial capital given to this bank will be around 10,000 crore rupees, and it will house around 75,000 crore of bad loans. However, you must remember, the absolute value may be high, as a lot of these loans have already been provided for. So in the example of older cases like ISAR, where the majority was provided for, let's say a small amount will residually be left over in the bad bank on book value, although it will show as the original loan value. So that's kind of what they're proposing. Nothing's been set in stone yet, but it looks like an interesting vehicle in which to store all the stress so banks can improve their balance sheet a little bit.
All right, Varun, and let's now move on to some state-specific news and something very different, and that's there on Times of India in the front page here, and that is the state of Maharashtra allows home delivery of liquor, but Mumbai must wait for it. But to talk more on this, we're joined by Utkarsh Chaturvedi to take us through why this move coming in from Maharashtra government and why is Mumbai left out. Utkarsh?
So, Cheryl, it's been talked about for a very long time that to maintain social distancing and the kind of visuals we saw in the initial days when the liquor shops were open, the home delivery has been considered something which many states are going for. Punjab started in the beginning, and now if you look, obviously Maharashtra going ahead and also implementing the same. The orders came from the excise department yesterday, and this was later written to the Home Ministry regarding the sale of IMFL. Now the guidelines will come in the next 2 days. So from Thursday, we have been told in the next 2 days you can start the delivery, can start. There's still some guidelines they yet to come. The thing is that you have to have a permit, but the permit can be issued by the shop owners as well. Now, regarding Mumbai, the bigger problem is that in Mumbai, the sale of liquor was not stopped by a state government. Instead, it was the BMC which went ahead and stopped the sale of alcohol in the city. So what you have to wait for is more directions from the BMC clearly, that will they take that call or not. But if you look at any other city, whether it be Pune, Nashik, or everywhere else, the sale of liquor by home delivery will start in a couple of days. We are still, but that's more or less of how things are at this point of time. It on own, but we've been told that it will move online very soon. Or if there is any system as such in the cities, whether it's Pune or Nashik, you can go ahead and deliver, get that delivered online as well. The rationale obviously has been for a very long time that in a case of home delivery, social distancing and contactless deliveries can be maintained, whether it be food or alcohol. And we have spoken a lot about it in the past as well, that how alcohol at this point of time or liquor is giving the much needed revenue to the states, and that's precisely the reason why many states, have gone ahead, opened the liquor shop, and now many states are now going for home deliveries of liquor as well. As I said, it gives you a scope of contactless deliveries as well as maintaining the social distancing, what we have been looking at.
All right, switching gears a little bit. Our chief channel Corona analyst is typically Cheryl, but I'll walk you through what's happening with the Corona headlines today globally. 149 flights and 1.5 lakh Indians are to return home. Maharashtra allows home delivery of liquor. All special trains have been booked for the entire week. Cases doubling time is slowing to 12.2 days, so that's an encouraging figure. In Wuhan is going to test 11 million residents amid virus rebound fears. So after a long time, we saw some cases creeping up in Wuhan, causing quite a ripple in the origination point of the virus.
Thank you, Varun, for that. Like you just mentioned that I am the chief, the researcher for coronavirus for the channel, like you mentioned. Here's another headline that's there on the Times of India on coronavirus, that India is now the 12th worst hit nation, just below China. Definitely a matter of concern coming in for the country. That's a story that's there on the Times of India as well. But let me move on now from coronavirus on to some good market voice, and companies which adapt to the changing consumer behavior will gain leadership post-crisis, and that's the word coming in from Ramdev Agarwal in his exclusive chat that he had with ET Now. He believes that technology and telecom will emerge as the new age sectors after the pandemic. So listen in to that exclusive conversation.
I mean, it is very difficult to say right now, is there any emergence of new powerful engine to be beneficiary of this post-COVID recovery. One thing is for sure, there will be post-COVID recovery, whether it is a V-shape, L-shape, U-shape, that only time will tell. And there will be also emergence of new businesses which would look very, very strong. Like one of the things which I see is that technology telecom technology has emerged, it will emerge as a much stronger business. They're not hurt in this point of time, and they will actually emerge on the dependence of the masses on technology has increased, and hopefully there is a little pricing power also in the telecom. So I think we have to go one by one. Even the lenders will do very well from some point of at some point, in the sense that once the full risk is priced in, because the incremental GDP from here, from 3 trillion to 6 trillion, will have a far more intensity of credit, and the number of credit lending organization will be far fewer. So the opportunity even pre-COVID was very good, but now post-COVID, for the successful surviving and growing lenders will have a far bigger upside and much better margin, I would think. So like this, you have to keep thinking where are those? When the results come, see, right now it's all about the past. Past image that this bank is good, this NBFC is good. But once the result comes post moratorium is over, then we'll realize who was really underwriting very well. So this time clearly, and the ones who are underwriting very well, they will be able to smoothly pass through the bad time, and then you'll get time to log on to them meaningfully. So we have to go very, very carefully. Which are the businesses, which are the managements, and this is a real test of quality for all the businesses, even in consumer. The ones who don't have a good product, good customer loyalty, I think they will fall by the wayside. So it's a very interesting post-COVID recovery.
With that, we're completely out of time here on this edition of the Newspaper Show with Cheryl and me. Thank you so much for tuning in. Do remember, papers are completely safe. Do get your own copy, and wantmypaper.com is where you need to go. With that being said, let's quickly get you some news from the Impaired segment. Listen in.